Thank you, Chairman Frank, and thank you, Commissioner Stevens, for appearing before us this morning to provide us an update on the physical and management performance of the FHA. I also want to thank Ms. Capito for her leadership on FHA issues and for requesting this hearing. The release of last year's annual independent audit of the FHA insurance fund and continued weakness in the housing market have sparked a lot of anxiety on Capitol Hill and in the financial markets as to whether the FHA program is viable and whether it can meet the many management and market challenges that lie ahead. Last November's annual independent audit indicated that the FHA fund had dropped to a less than expected 0.53% capital ratio, substantially below the statutory 2% requirement. The report also stated that the economic value of the fund declined over 75% from the previous year to approximately $2.73 billion. A new audit of the fund is expected in less than 2 months, and given the many statutory and regulatory changes that have been implemented over the past year, it should serve as a useful barometer of whether the policies are working. Beyond the health of the fund, however, there are other policy questions this committee needs to address. For example, there are current estimates that the federal government is responsible for more than 95% of all new mortgages, with FHA carrying a 30% market share. This undeniably strong presence in the market, coupled with government guarantees for loans up to $729,750, raises serious questions regarding the impact of federal policies and how we can assure that the private sector reenters the market to decrease taxpayers' exposure. In assisting struggling homeowners, FHA has implemented several new programs to assist families facing foreclosures and borrowers whose mortgage principal exceeds the value of their home. My understanding that TARP and the Neighborhood Stabilization Program funds have been used, however, I'm not clear how these initiatives have helped a substantial number of families and whether the assistance offered was cost-effective to the taxpayer or fair to the homeowner. And regarding efforts to dispose of real estate owned by the FHA, there are concerns the agency is marketing programs that encourage the same types of fraud, abuse, and poor underwriting standards that led to the current housing crisis, which also increased taxpayer exposure. And I add to that the fact that there are literally millions of homes on the market, many millions owned by banks, those being in foreclosure or facing foreclosure, which is an additional challenge. In closing, I commend Ranking Member Capito again for her work on the preservation and reform of the FHA program. Her legislation, H.R. 4811, the FHA Safety and Soundness and Taxpayer Protection Act of 2010, includes important enforcement, physical, and risk assessment tools necessary to adequately administer the program, detect fraud and abuse, strengthen underwriting standards, and protect the taxpayer. We believe these are worthy reforms that deserve the administration's support. Chairman Stevens, thank you again. Or Commissioner Stevens, thank you again for being here. We look forward to your testimony.